let's look at the S&P 500, 52.53. It's up off the lows. Mr. Kevin Green, is there anything in the technicals here for hope?
You ask me that every single day. I can tell you.
And I will continue
Look,
to.
yeah, I know you will, man. No, I mean, the trend is still to the downside here. I mean, you could get some counter trend rallies, and then maybe when Jerome Powell speaks, and if he does kind of open the door for being a little bit more accommodative, maybe the market tries to bid off of that. But right now, you're still looking at a move to the downside here. And if I'm looking at the intraday levels here, 5,200 is going to be a key area. If you kind of look at the E-mini S&P 500, the lows from earlier this morning kind of equated to around that 5,200 level, and we did see some buyers really stepping in. And if we do have a failure there, it's not outside of the realm of possibility that we look towards that 5,000 level. I'm not sure if we're going to get to that level, but the reason why I kind of bring it up, there's actually a pretty significant amount of positioning there, Oliver, both on the call and put side, where somebody has been, basically selling straddles there for almost like the last 3 years or so. And so that'll be actually a very interesting level if we do kind of get there. If we find a bottom right now and we get a move to the upside, first area I'm looking at is 54.25, and then looking at 5,500. Once again, wide range that complements what we're seeing in the VIX, which we did kind of break over the 30 level officially, and then kind of got towards that 40 level here. And so I would say continue to kind of buckle up here and try to maneuver this market as much as you possibly can. I don't think we're over with on this by any stretch of the imagination, just given the news that we've gotten from China, and then we also could get news today from the EU, which could also, which could also kind of give us maybe a little bit more of a vol spike here.
It's interesting. Our conversation yesterday, we spent a lot of time with all of our vol guests and yours and I about VIX being kind of low compared to March, compared to the previous high. We talked about what it would take to get a further spike to break out in VIX. So what's interesting to me this morning is some of the other things actually are a little bit more optimistic today. Bitcoin's up. Yesterday it got slammed, obviously. The dollar's stable. Yesterday it got destroyed, obviously. Crude oil's getting massacred again. But it's interesting that the vol kind of picked up here. Is there anything to be said about that signaling capitulation? Or is a vol spike into the realm of 90 plus or 60 plus, like a yen blow-up event, something that we need to be highly alert to?
Yeah, I mean, you could look at a 50 VIX would probably get you towards that potential. I don't want to say capitulation, because it's what makes this market a little bit difficult, right? Is the fact that it's news driven. It's not really fundamental. And when I say fundamental, it's not like we're getting earnings reports and we're seeing massive revisions yet. And so the news can actually drive vol, and that's really what's happening. But once you kind of cross that 40 level, even 30, it starts getting a little bit. You're in that third standard deviation range for the VIX. And so that's where it gets a little bit concerned. Now, can it stay elevated? It can. Back in 2008, I think the VIX was over 50 for almost a month. So, I mean, if we have that type of an event, then yeah, we could have elevated vol. But I think you would also, in order for us to really have that, you would have to have the back and forth, Oliver, and then you would also have to have some form of a credit event to really see that sustained upside move when it comes to volatility. So right now, anything's possible to the upside here. But I would still probably look more towards, and we talked about it yesterday, looking at trying to hedge or have a vol play directly to the SPX or the Russell or the NDX, probably rather than playing VIX or VIX options or VIX futures right now, because that's just going to be, when we do have the vol crush, it will be, in my opinion, it will be very aggressive, and you can be offsides fairly quickly.
Okay, and I mean, not reading too far between the lines, but it sounds like you think still the path of least resistance is likely lower.
Yeah, I think I think the S&P 500 will see a four handle this year, meaning that we get to the 4,000 level. I think that's something that's in the cards when it comes to the monthly charts. And then just based on the velocity of the move right now, I mean, we're only 300 points away from that actually happening. And so I think that would probably be what I would feel comfortable with, or if we had that 50-day moving average on, or 50-month moving average on the monthly chart is really that key area that I'm looking at. Once again, we have way too much uncertainty right now. It seems like Donald Trump's kind of doubling down here if you're kind of looking at the Truth Social post.
Yeah.
And then we haven't gotten to the earnings season here where we haven't gotten any type of revisions to the downside here. And I think those are going to be all of those headwinds. And in the second half of this year, you could also say that you start looking at GDP numbers and saying, okay, well, do we have 2 quarters of negative GDP? And I think Q1's going to pretty much be in the books that we will have a negative print for Q1. Just based on what the Atlanta Fed's at right now, which they're looking at like negative 2.5%, negative 3%, I think.
Yeah. So they're still pretty deeply negative. Okay. Crude oil. I think we need to address that because that is fitting your analysis here directly. Like the long Tetris piece, because crude breaking down multi-year lows basically screams recession and slowdown.
Yeah, it does. The $65 level is a key area for a lot of energy traders. Once you break that, that's pretty much a recession signal. And we have seen a little bit of a slowing when it comes to consumption, but we have been able to manage prices here. And unfortunately, once again, you're getting below that $65 level. And what could actually happen over the next couple of months, it's not outside of the realm of possibility that we see $50 or even the $45 level when it comes to crude oil. Just given the fact that if OPEC's going to continue to try to ramp up production, and which will be actually very interesting if they're going to continue with that policy with prices falling off the map here. But if they're going to do that, that'll put more downward pressure on the market for now until a point. And I think this is where it gets a little bit dangerous once we kind of get through this whole mess, Oliver. Energy companies will also tighten production and lower rig counts. And that's going to hurt the Permian Basin players, the Eagle Ford players. They will tighten and they'll try to stabilize prices as much as they possibly can. And if you do have any type of expansionary policy with that tightened supply, that's where you actually get a really massive re-rating to the upside for crude. So right now it's looking like it's going to be to the downside, but production will go lower here and tighten up. And we are actually at anemic levels when you're looking at diesel prices as well. So we are seeing diesel fade around 5%, 6%. But that's where you have inventory levels that probably will not be sustainable if we have any type of power move to the upside when it comes to consumption. So this is kind of that next signal that says, yeah, recession's being priced in. Treasuries are saying recession's being priced in. Dollar breaking below $100, I think would also then signify that recession's being priced in. And unfortunately, in my opinion, it seems like that might be inevitable. It doesn't mean have to be an aggressive one or a nasty one.
Yeah.
But I think from the numbers standpoint, this seems like regardless of what we do over the next 2 weeks or so, we probably are on that trajectory for at least a shallow one.
All right. Big call by KG. Put it in the books. Like hearing you stick your neck out. Impressive. Thank you, Kevin Green.